have our screen showing, so you should see the slide that shows ETF tipping point trading system, and you should be hearing my voice. So let me double check on all of that. And I just like to double and triple check to make sure that we get that all covered right at the very beginning. And we're going to go ahead and get started. You'll notice there's a questions box, so you can ask questions as we go through the presentation. We won't necessarily stop the presentation midstream to answer those, but we will answer every question before we're done here today. Good afternoon, good morning, good evening, I guess, depending on where you're at in the world. This is Kurt Christensen, and today we're here with the ETF tipping point trading system. We're going to show you a completely mechanical system for trading in bull and bear markets using ETFs as proxies for the major sectors. So let me go ahead and make sure that we can draw on the screen. That's one thing we like to do, just to emphasize certain points as we go. So we should see just some random drawing on the screen. That's good. And we'll go ahead and get started. So everyone should be seeing my screen and see me drawing there, and you can hear me speaking, of course. Why don't you go ahead and introduce yourself? Just tell us where you're from. I can already see your name. That's automatically included. So if you could just tell us where you're joining the call from here tonight. We have Miles from Texas. We have Paul from Minnesota. We have Craig from California. Greg from Alberta. Robert from California. Martin from Detroit. Jennifer from Dallas. Danny from Singapore. So ding, 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 Singapore. That's the farthest away from my current location that we have so far. Stanley from Texas. David from Kentucky. Dale from Denver. Chet from Ontario. Sylvian from Quebec. Kent from New Mexico, Houston, California, PA, Delaware, Madison, Wisconsin, Minneapolis, Roy from Texas, Tom from Denmark. Ah, well, that's a toss-up. Which one's farther, Singapore or Denmark, I guess. All right, thanks, everyone. We have a few English on, and actually someone here in Spokane as well. So welcome, everyone. We'll go ahead and get started. We're going to talk today about a completely mechanical system for trading in bull and bear markets. Now, before we get on to that, of course, we need to disclose that this is provided for the express purpose of disclosing proprietary investment system that is copyrighted material and is not to be used as an endorsement or offering for any stock or purchase. Is meant to be educational guide only. And the most important part is the last part here, where it says the past results of any trading or investment system are not necessarily indicative of future performance. So that said, why should you listen to me? That's me, Kurt Christensen. You know, frankly, I'm nobody special. I'm from a small dairy farming town, Preston, Idaho. And if you've ever seen the 2004 hit movie Napoleon Dynamite, it is set and filmed, and a lot of the extras are from Preston, Idaho. That's where it's all set. My dad and my grandfather, my great-grandfather before him, all graduated from high school there in Preston, Idaho. Okay, so that said, I did luck out in a couple different ways, and the biggest way is I got in on the beginning of the internet boom. So I got in and had one of the very first internet startup companies, and we sold that on May 1st of 1998 for $11 million. So you can see there on the press release. You know, I was a small part of that. You know, I was one of the 7 partners that helped start that company. So that helped me get my start. That was actually my senior year in high school, not high school, my senior year in college. And since then, I've done all kinds of internet marketing ventures and venture capital ventures all over the world. You know, I've been flown around in Learjets. You know, there's me on the Learjet. I've spoken on stages around the world, everywhere from London. There on the left there, you can see London, United Kingdom, to Vancouver, Canada, to I've gone on speaking stages with celebrities such as T. Harv Eckert of The Secrets of the Millionaire Mind, and put on my own events all over the world. I've done all kinds of stuff this is in Costa Rica, you can see here, ziplining in Costa Rica with my group. And then I've actually even spoken in Russia, and the seminar we did in Russia was actually on cable TV in Russia for a number of years after that. So I'd get these cryptic, weird calls in the middle of the night from Russians sometimes that somehow located me, obviously using the internet, and tracked me down and had some questions about what they had watched. But I've even been featured in a few books. I'm one of the characters in the book Nudist on the Late Shift, which is Other True Tales of Silicon Valley by a gentleman by the name of Poe Bronson, and in books like How to Get Rich on the Internet and Click Here to Order by Joel Comm. But if you're anything like me, and I think most of you are, if I know my target market and my demographics, you're probably in a profession much like myself where you've had an opportunity over the years to make a decent amount of money or sometimes significant amount of money. But if you're anything like me, every time I've turned my investment dollars over to someone else, it's bombed. And that is an utter pain. That every time I turn my investment dollars over to somebody else, it bombs. But I also don't want to be day trade or be chained to my desk. If you see this picture here, this reminds me a lot of day traders when they get into the market. All they want to do is sit in front of their computer, and even when they're on vacation or they can't really go on a vacation, they have to watch their positions at all times. Me personally, I prefer to do things like travel, and this is just the areas in red are places that I've already been, and the areas in gray are places I want to go, because I like to spend time when I'm not working with my family. So I already have a full-time job as an internet marketing guy and a marketing guru. I don't want my investing, my trading to become a second full-time job, and I'm sure most of you have that exact same feeling. You want to get good results from your investments, but you don't want to have to dedicate a whole second career to it. You want something that you can do in 10 to 15 minutes at night. And so, show me the money. What's the results of this ETF tipping point, and why are you on this webinar tonight? There's a couple hundred people on here tonight, and we want to share with you exactly why are you here and what results are you going to get out of this. Here's our box score of the entire 7+ years that we've been running this. This goes all the way back to January 2007. And you can see since then, we've had some pretty stellar results. Kind of the boiled down number you want to look at is down here on the bottom. The system results exactly at 4.03% per month trading the single ETFs. Now, we have many other ways to trade these using double ETFs and options and things like that we'll talk about later. But just the lowest common denominator trading single ETFs, that's the kind of results we can get. And just to show you what that means, what if starting from day one that we opened trading the system, 2007, you put $10,000 into each of these 9 different ETFs? Well, if you would have put that into DIA, you would see this curve right here. And you can see that there's actually 2 different lines. We have the top line is the compounding line. That's this one right here. And the bottom line is the non-compounding line. So everything that we show you is going to be both compounded and non-compounded. So to get those numbers for you again, they're on the DIA with compounding went up to about $10,000, turned into about 140. On the SPY, it turned into about 85,000. On the NASDAQ Tech Index, it turned into nearly 100,000. On the financial index, turned into about 950,000. On the oil index, it turned into about 140,000. On the gold index, turned into about 400,000. The real estate index turned into about 160,000. And IYR, which is, this past one, the SMH is the semiconductors index, SMH, and the last one, our real estate index, the IYR, turned $10,000 into nearly 900,000. Now this is with compounding. The XLB selling off just a little bit recently, but still turned $10,000 into 220. So basically that $90,000 turned into $3.042 million with compounding, or a 33 times increase. Now, when we talk about compounding, all we're saying compounding is we take a trade in a sector, for example, and the trade is either a winning or a losing trade. Because we have money allocated to each individual sector, it's either in a trade or not. There's not multiple trades in the same sector. So if we take a DIA trade and it goes up 1%, Well, the next trade that we enter in, we put it, 101% of our original into the trade, and it goes up 3%. Well, then after that, we put 104% of our original money into the next trade. So that's how the compounding works. So with that, we'd be up 33 times on our money. Now, let's say, compounding obviously is can be a little bit risky. If any of you traded any period of time, you know how compounding is kind of a gotcha. But even without compounding, the $90,000 turned into $400,000 with zero compounding, a 4.5 times increase. Now, so that's assuming that we make the same value of trade every single time. We start with $10,000 and we bank all our profits. So doing that, even that, still today, trading with the same $10,000 in profits, we would turn $90,000 into $407,000. So again, that's the box score. That's what it basically boils down to. Is folks, if you're looking for a system where you can get 4% a month trading ETFs in less than 15 minutes a night, that's what we're here for tonight. So if that's not what you're here for, you might as well hang up now. That's what we're going to talk about. We're going to show you exactly how this works. And of course, like we mentioned in the email thing, I think a couple people sent me emails on this. Yes, we are actually giving away an Apple Watch at the end of this webinar. So the only qualifications, you don't have to buy anything. It's to get the Apple Watch. That's the thing that we'll give away at the end. Of course, we do have our ETF Tipping Point product for sale, and we'll talk more about that. But we have right up 420 members worldwide. We're only looking to put on another 80 members before we close this out and stop marketing the ETF Tipping Point. So before we get to that, let's define what an ETF is. First off, and a basic ETF is an artificial index designed to exactly mimic an underlying basket of stocks. Now, the great thing about an ETF is there's no management fee. The price fluctuates just as the underlying does. So you don't have to be a fund manager, and you're not going in and out of different issues, and you're not looking to beat the market. An ETF essentially is the market for whatever sector or category that you choose. Now, an ETF can be any one of 1,000 different configurations. For example, if for some reason you thought Malaysia is going to be super hot, Malaysia stocks are going to go through the roof, well, you could just simply buy a Malaysian ETF with one transaction, pay your $5 or $10, just like you pay for a stock or equity, and you could invest in the entire Malaysian stock market. So from a simplistic standpoint, if you were to do the same thing, for example, in the Dow 30 stocks, if you were to buy all the stocks on the Dow 30, average their gains and losses, and at the end of the day, you would come out with a composite price equaling the sum of all the individual parts, divide that by 100, put it on an exchange. That's what the ETF is. The ETF version of the Dow is the DIA, and we'll show that here in a minute. Now, the same is not exactly true for what are called double and triple ETFs. And if you have your handouts, make sure to follow along with your handouts, because double and triple ETFs are a little bit different. They must use futures, options, and other hedge vehicles to attempt to make multiples of the current market gain or loss in any one day. Some are better than others. The ones that we use are pretty dang good, but there is some pretty sketchy double, triple, and quadruple ETFs out there. Now, the whole purpose of a double ETF is, for example, if a double ETF on the Dow, if the Dow goes up 100 points, the double ETF's goal is to go up 200 points, right? And the nice thing about doubles is they go both ways. They're all, there's straight double ETFs that are bullish, and then there's ETFs that are inverse ETFs or bearish ETFs. Don't get too caught up on that. It's not that big a deal. We'll show you tons of examples as we go through here. Okay, so anyone who's familiar with the stock market is familiar with the Dow Jones Industrial Average. And so if this is in our Thinkorswim software. This is what we personally use. And you can look and you can see the curve of the trading, not the trading of the index, because the Dow Jones Industrial Average isn't actually tradable. But what if you wanted to trade it? What if you wanted to trade it exactly and get these ups and downs of the Dow Jones? Well, you can do that. It's called the DIA. You'll notice the only thing that's changed is, if you look here in the left-hand corner, is we're now looking at the Dow Jones, and it says, well, the Dow Jones Industrial Average ETF. It trades exactly lockstep with the underlying index. And that's very powerful because it allows us to do a lot of different things. So you may be asking, why ETFs? Great question. Well, ETFs, quite simply, have $1 trillion have gone into ETFs in just the last couple years. If you would have asked even 10 years ago, a financially astute investor what an ETF was, they would have no idea. But in the last 5 years especially, they have taken over the market. The reasons for that are huge. Number one, they have a lot lower expenses. Number two, they have much more tax efficiency built in. They offer financial flexibility. They offer consistent market performance, and they have mass appeal. You can find an ETF that will do just about anything that you're looking for. Like I said, there's over 1,000 ETFs. So if you're looking for any sector of the market, there's most likely an ETF that attempts to mimic that sector of the market. Now, we don't trade every single ETF under the sun. Actually, we only trade a small segment of those. We've narrowed it down to 9 sectors that we really, really like, that we have very specific types of ETFs on, and we're going to talk about that. So how do we generate the signals? And when we talk about signals, what we're saying is, how do we get the trade notifications that let us know in that 15 minutes a week what we need to do with our money moving in and out of different positions? So here's what we do. Because, if we think about trading, there's really only 2 ways to trade. There's either technical analysis, is where you're looking at price, time, and volume, and we'll talk about that in a second. Or there's fundamental analysis, where you look at weather patterns and government decisions and things like that. Now, technical analysis is a school of thought that I subscribe to, and probably most people on the call as well. But if you think about it, technical analysis has been around for 40 years, and we still don't have what you would call, the holy grail of indicators. That would be something like, just on your iPhone, on your computer, all of a sudden you hear a soft computer voice that says, "Hey, it's time to buy the Motorola. It's gonna go up 20% tomorrow." Now, Larry Williams has filled at least 3 books with 60 or so different oscillators. If you go to any Barnes & Noble or just look on Amazon, you can see there's hundreds and hundreds and hundreds of books on trading using technical indicators. But if you think about it, we've been at this for over 40 years now. Shouldn't there just be one by now that actually works? When it comes down to it, it's the study of technical study doesn't by itself do it. Let's face it, we really only have 3 basic elements to look at. And if you're following along with your fill in the blank PDF, this is going to be an answer. We have price, we have time, and we have volume. That's it. That's all we really have. So everyone scrambles to put their name on a proprietary indicator that attempts to manipulate those elements in a slightly different way to produce a slightly different result from the next guy. But the failure of all these systems is that they all use moving averages. You've got all different kinds. You've got MACD and parabolics and Bollinger Bands. But even someone who's new to trading knows that moving averages are a huge gotcha. If you set them too short, you get whipsawed and go in and out of the market all the time. If they're too long, you get left in the dust. So even if newbies know that, then why do traders with 35 years of experience and on up still try to make working moving averages work? The problem isn't that they don't work, it's that they just don't work all the time. And that's where the real expertise lies, knowing when to use them in a long trend or when the market's overbought or oversold, and avoiding them in periods of a flat market. Well, guess what, folks? The markets are flat nearly 40% of the time. So are you willing to count on a tool that's going to be wrong 40% of the time? The more intelligent folks are more likely to gravitate back to them because, there's just got to be a way to make them work this time. Can't tell you how many times I've heard that. So for the past 15 years, I personally have avoided moving averages like the plague. Sure, I still look at stochastics, so special 5 through 3, but that's just when I'm looking for confirmation. Heck, I don't even use candlesticks anymore, and I've studied those for years. Because when we're talking about the market, we don't want to run with the pack because, quite simply, the pack is invariably wrong. What we want to look for is we want to look for something that not everybody is looking at, something that's not readily available, something that's not right on the screens of everyone else. So this gets down to what I do look for and what we're talking about tonight with this ETF tipping point. Number 1, we want to start with optionable stocks, options, ETFs, and indexes. I advise you to do the same whether you trade options or not. It has been shown that optionable stocks have more investor interest, which equates to a better trading vehicle. Generally, their prices are more stable and display more investor confidence. By using this simple call, we can reduce the pool to about 3,000 stocks and by nature, just find stocks that are more liquid. The average price of a stock with options is just $18.58 versus the price of stock with no options is $30.60. However, the volume tells an entirely different story. Stocks with options have 18 to 1 higher volume. Very simple. Number 2 is we're going to look at ETFs, which are just proxies for their components as a basket of stocks, but these baskets have some basic problems that we can discuss later. ETFs and indexes today are a mishmash. Some of them are price weighted, some of them are market cap weighted, and more importantly, what we use is we want ones that are equal weighted. In our opinion, we're going to cut to the chase, the only sensible way to treat these is equally weighted. We're trying to look for a move across a sector, which means an incremental move in each of the individual stocks that make up the entire sector. Any other type of weighting would disguise this. So if we're looking at the S&P 500, every stock has a 1/500th weight, whether it's priced at $4 or $400. While the index may be moved by a few big cap weighted stocks or price weighted stocks, by removing all the weighting, we get to see what the undercurrent is across the entire gamut of stocks. This is huge. So the last thing we do is we look at the on-balance volume for the individual stock components that make up the entire ETF. Now, this is easier said than done. Some of you may be familiar with a gentleman by the name of Joe Granville. Now, he's the father of the on-balance volume indicator, and maybe he wouldn't like what I've done with his baby, but maybe would, but that's where we got started. Because in 1963, he came out with his book, New Key to Stock Market Profits, and this was the first and most popular indicator to measure positive and negative volume flow. Here is the magic 3 words: volume precedes price. Quite simply, that's the answer to the $64,000 question. A change in volume is always going to precede a change in price. Bullish or bearish. Volume precedes price. Take that to the bank. That's what we're talking about tonight. We're going to use a volume-based indicator that you've never seen before, that we developed, that's going to show us what's happening, what's the undercurrent in these underlying markets in these different sectors. So OBV is a simple indicator that adds a period's volume when the close is up and subtracts the period's volume when the close is down. A cumulative total of the volume additions of subtractions forms what we call the OBV line. So the calculation is pretty simple. Today's new OBV is yesterday's OBV number plus today's volume, if, for example, if today's close was up, or if the close of today's close is down, the OBV is yesterday's OBV minus today's volume. That's it. Now, the intent is to ferret out where buying and selling pressure is, but the weakness is pretty obvious. Think about it. What's the weakness? The weakness is, in Joe Granville's case, they only made this calculation once per day. We're in an entirely different world now from 1963. And making this calculation once per day, while at that time was helpful, today is almost useless. Because if we have a strong rally day with huge volume, but in the last 15 minutes a sell-off occurs, the index we're monitoring goes just slightly negative, then all the volume gets assigned to that side of the ledger, right? Conversely, if we have a real high volume down day, in the last few minutes it turns just slightly positive, all of that volume would be added to the positive side of the ledger. So it is a tool, but it's kind of a blunt tool. It doesn't tell us much as we would like it to tell us. So it doesn't take too long if you're only calculating at the end of the day to lose the true importance of the underlying structure. So what we've done is we've invented what we call the ETF tipping point. So here's how it works: is we look at every single stock individually that makes up the entire ETF. That means for the S&P 500, I keep a running track during the day as to whether there is more buying or selling pressure going on every single trade, tick by tick, across every stock in the S&P 500. So you may be thinking, well, how do you do that? Anybody have any ideas? How would you be able to tell whether there's more buying or selling pressure on every single stock transaction that takes place on every single one of the 500 stocks that makes up the S&P 500? Go ahead. If you have an idea, type it in there. Well, I'm kind of giving you a little bit of a cheat because we're already on the slide where we talk about it. So what we do is we evaluate the bid price and the ask price. because when every trade goes off, there's a bid price and an ask price. We evaluate whether the trade was closer to the ask price, then that means the sellers were willing to hold out for higher prices and buyers were willing to pay extra to ensure that they got those shares. Conversely, if the sale went off at the bid price, then it was the sellers who were willing to move their prices down toward the buyers who were in control, able to force the hand of the sellers to reduce their price. So then that either established a positive or negative tick volume, which, like in Granville's original idea, allows us to set up with a greater confidence a more precise measure of where the real power is, with the buyers or the sellers. Now, at the end of the day, we can look at a losing day, but we know that that on balance, it was actually a bullish or bearish move for the majority of the stock. At that point, we simply do a cumulative summation of the next 13 sessions. At the end of that time, we have a pretty good idea of what percentage of stocks are advancing on hidden power or failing despite rising prices. At the end of the day, I know out of 500 stocks in S&P 500, how many are on a positive footing, greater than 50% with more real accumulation, how many are in a negative stance. Using this synthetic on-balance volume line, which we call the ETF tipping point, we end up with a pretty high confidence of which way the market is going to head in that sector. Now, notice that all of this is done without the slightest use of moving averages. By the time we get to about 5 hours into the market day, I have a pretty good idea what the end of the day result's going to be, irrespective of price. That is why most of the time I'll be able to take a glance and know what the end result will be on the market close. Okay, so seeing as how we've been collecting this information over the prior 13 trading days, we know where each company within the ETF stands in terms of a positive or negative trend. And when it switches from positive to negative balance, more than 50%, we have a buy or sell signal. Now, there's 5 different ways that you can trade these signals. All the results that we talked about, the 4.03% per month, that's based on trading the single ETFs. So of course you can trade the single ETFs. You can go buy when bullish, short when bearish, or in this case, buy or short the SPY, the S&P 500, which would be the SPY. Now, if you want to amp up your returns and trade the double ETFs, of course, you can trade the double ETFs, like the SSO double ETF when bullish or the SDS when bearish. You could also buy options on the underlying ETF or buy options on the double ETF, or my personal favorite, you can trade the best in show stocks in the individual component. Every day we rank all the component stocks within the ETF by its performance against its underlying index. For example, for the S&P 500, we call the SPY 0, then rank all 500 stocks by their recent performance. Usually this means you can find individual stocks that are outperforming its sector by 8 to 15%. If you're right on the direction of the ETF, these stocks are the primary drivers for that gain and therefore will consistently give you better gains. Now, this is all optional, of course. You could just trade the single ETFs or the double ETFs, but it's usually worth it for that little bit of extra work. So let's walk through the whole process. At this point, I'm going to assume that you've decided to forego the development of your own tick-by-tick collection platform, because that's what we do. On each of the S&P 500 stocks, we monitor each trade on the S&P 500 stocks tick by tick and accumulate those over the day and sift and sort to get this ETF tipping point number. Okay, that's what we do. If you want to do it on your own, of course, we use publicly available data. It took us a couple of years to get right. Some people just like to do it on their own. But if you'd like to forego that and get the results of that, that's what we're offering here to you tonight. So what you can do, what we do is we pass out the signals at 12:30 p.m. Pacific time every day that the market's open, which is 3:30 p.m. We send out that notification by text and email to make it hands-off for you. You can trade the next morning if you like, but we prefer if you make the trades that same day in that 30 minutes before the market closes. And for most of our students, they start out by buying or selling the ETF or buying and selling the double ETF, and simply hold that position until you receive a signal to reverse or until you're stopped out. The average trade is about 21 days right now. Okay, and note you could be in a cast position if your trade gets stopped out. In that case, we wait for our next signal and re-enter the market. An ETF is going to be either bullish or bearish. So we sit in a lot of trades for a period of time. Sometimes when the market moves sideways, we are going to be in that trade until we either the market switches from bullish to bearish or bearish to bullish, or until we get stopped out. Now, if you're only comfortable playing to the upside, then only trade when bullish and go to cash for that ETF when they're bearish. Every day around 12:30 p.m. Pacific or 3:30 Eastern, we'll send out an alert where we believe the signals will be by the end of the trading day, and this is done by posting on our blog or also by email or text message, which we covered. So here is a past example. Let me pull up a more current example so we can have a true up-to-date example and show you exactly what that looks like. And I notice we got a lot of questions coming in, so we'll go ahead and take some of those as we go here. Hold on just a second. Okay, so here's through the end of last month to make it nice and tidy. Shows exactly what the trade tab looks like. This is what you get on a daily basis, and it shows at this time we were in 7 of our 9 trades. We were in, the longest trade was right here, 110 days for the KBE trade. The other days were 53 days, 53 days, 53 days, 49 days, 34 days. And you can see we've got 5 winning trades and 2 losing trades at the time that this was sent out. And that's exactly what it looks like. Let me go through our questions to answer any questions we have. Okay, so Paul Johnson had a question about short in a 401k or IRA. Well, in a 401k or IRA and in a retirement account, the simple answer is you can always just use the double ETF. So when the signal is bearish, you can buy the bearish ETF. And Richard Berry says he likes the idea of the highest performing stock in each sector. Yeah, we'll get to that in a little bit more depth and show you exactly how it works. And also, we have some people asking about the options. Yes, you can trade this using options. We'll cover that here in a minute. For example, if we're talking about the DIA, we entered this trade on 116, and it's currently up 2.23%. Not a great trade, but that's realistic. That's sometimes we have stellar trades. Sometimes we have just okay trades. This one's just an okay trade. 53 days in length, 2.23%. You could have also bought the DDM, which is the double ETF, and it would be up about double that. It would be up about 4.4%. Or you could have bought this option, which is the DIA September 178 call. That's what all these numbers mean. And it would probably be up about 3 to 4 times this initial percentage of 2.23. Or you could have bought the option on the DDM, which is the double ETF, of course, and it would be up a multiple of that as well. So that's looks like a July 130 call. So that's actually what you get on a daily basis. So like in a day like this, where there was no changes, it just says no new changes, shows you the updates on all the positions. In this case, we're on that day, we're still waiting for 2 of them that were in cash, waiting for those to go back active. We had a question about our stop levels. Yes, we do have stops on these. You can see a sell stop level for each of these. We have very wide stops. These are based on the average trading range of each of the ETFs. So they're very wide because we're trying to stay in the market either bullish or bearish. We had a question from Billy. He says, do you also send the double long and double short sheet each day? Yes, it's going to look like this every day. And so if the trade came up, it gives you a short cheat sheet so you know which one's the double long, which one's the double short. It's from Scott. He says, can we do weekly options with your system? Well, you can. It's not ideal because the weekly options obviously are a much shorter time period. I have another system that I've been implementing on trading weekly options, so we can talk more about that later. This is from Mike. He says, for those of you that are working until after the market close, can the system work for after close adjustments? Yes, it can. You can either place those after the market's closed to be executed the next day, or of course execute them, quote unquote, live the next morning. And Bill makes an important point. Says, does your chart assume only the ETF, not the double or options? Absolutely. All the results that we're showing right here and all the results that we've talked about are only from trading the single ETF. So the double ETF would be about double that. This is from Lori. She says, will you text out the trades or do I need to get email? You can give them both by text and email, or one or the other. Whatever way works best for you. Most people we recommend that you get both the text and the email. This is from Rich. He says, what's the rough correlation of the double in practice? Is it below 2 and by how much? It's just slightly below 2. It's not exactly double, but it's about, say, 1.9 times higher. So that's the meat of the positions, how it looks. You can see, I'm obviously right now, market's kind of performing a little bit erratically. Not one of our highest performing months, but the great thing about having a system that's been around this length of time is if you're looking to get 4% a month, this is what this is averaged month in and month out. Of course, average just means some months it's higher, some months it's less. And recently our performance is a little bit less because the market hasn't moved as much, but fortunately when we get into more of a bearish market, or bearish actually works the best. 2008 was our best possible year for the system. The next best year was 2010 with the flash crash. We were actually bearish in all these positions that mattered in front of the flash crash. Okay, so let's get back to the chart. So depending on your case of poison, you either buy the ETF or the options on the ETF or on the double ETF like we've talked about. Now notice we also give you the selected option, and so when we're talking about the option, that's quite simply, we will give you the exact ticker that you need to select that option. They've changed the last couple years on options. Now there's a very specific format that they give you the current options pricing. It looks a little cryptic, but it's not actually that bad. We give you the best selected option. That's chosen from our proprietary options engine and is the best trading choice at the time of the signal. So if you want to see what the option prices are, you can of course type those in and look those up. So, of course, here's the single ETFs that we cover. We cover the Dow Industrials, S&P 500, the banking index. What you're going to find is we cover most of the biggest markets out there: the Dow, the S&P 500, banking, tech index, oil index, gold, semiconductors, real estate, materials index. And, of course, we have double ETFs on all those as well. So, quite simply, then after you've done that one time, do it again a couple hundred more times. We've done it 1,024 plus times so far since January of 2007. Right? That's what we do. We make these simple trades. It takes us less than 15 minutes a week. It's not exciting. It's not day trading. Doesn't take a lot of time. Most days there's no adjustments to make. When there is, it's a matter of placing a trade that takes a couple minutes. So you'll notice we have the two options positions on columns on the right. We've gone to a lot of trouble to give you these option positions, and it's quite simply, let's see. Well, we just covered this briefly. Our preferred method is to trade the second column, which is the options on the double ETF. While the 2 times ETFs don't always perform double the 1 times index, they do generally perform better. Now, there's a number of different ways that you can do this, but for now, let's just keep it simple and make some money. Let's talk exactly what we're talking about. Now, for those of you who haven't traded options before, some words of encouragement and caution and due diligence here. Done properly, I believe that options actually carry less risk than the underlying stock. There are dozens of options courses you can take that run anywhere from $1,500 to $7,500 that all basically teach you the same thing: how to lose your money less slowly. By the time most newbies in options reach 6 months, 93% will never trade an option again, giving up their dreams of easy riches. Of course, we will still be there. I've been doing this for 15 years now. In a game that has 93% losses, that means 7% of the traders are keeping all the money. And frankly, folks, that's where we want to be. So what goes wrong when we're talking about options? Well, initially, everyone is obsessed with the fair value of the option as it approaches expiration. So you're taught to look for some cheap, mispriced option. And so let's say you find a company, Acme Rubber, and you buy 10 contracts. It's out of the money with 3 weeks left to run. At 35 cents each, that equates to $350 is all to control the equivalent of 1,000 shares of the stock. 3 weeks go by, and for whatever reason, your mispriced option is now worth 70 cents on expiration day. You just doubled your money. And now you kick yourself for not buying $7,500 or $10,000 worth. The only problem is this will be the last time that you'll be lucky enough or talented enough to pick a winner. And just like first-time Vegas gamblers, you never win again. Frankly, I could not care less if an option is mispriced. I don't want to hold it all the way to expiration. And the options that we purchase in the ETF tipping point, we never, ever hold to expiration. We only want to hold them for a couple of months during the trade and basically rent them and sell them to somebody else so they can hold it till expiration. We buy options that are at least 4 to 6 months away from expiration and never hold it closer than 1 month to expiration. We're also buying typically options that have a delta of 70 to 75, which quite simply means these are in the money options. These are hedging options. They're not speculative options. And by renting the stock, by buying options this way, I'm just using the option as a proxy for the stock, and I get to get the gains without the obligation. My risk is totally limited to my investment. So the number one mistake that folks make in buying options outside of buying too close to the expiration date so they're forced to liquidate or take a total loss is investing too much in the option. Now let's say that I was going to buy $10,000 of each ETF. If I bought all 9 ETFs, that would be $90,000. Now let's say I just took just $9,000 or 10% of that capital and invested in options to control the same number of shares. Even if I lost every single position through some fluke of bad luck or bankruptcy, I would lose a total of $9,000. If I had used a 10% stop on the $90,000 equity position, I would also lose $90,000. It's a wash. Basically, by buying far into the future, you get the majority, if not all, your premium back, and you get the gains you were looking for without the risk. Now, a lot of people look at the daily options price fluctuations and get strange beasts crawling around in the pit of their stomach. But if you evaluate your losses in terms of the fraction you have invested, there's no reason to lose sleep. Quite simply, and this gets a little hard to say fast, a position that you invested 10% or $1,000 of what you would have put into the equity, or $10,000, that loses 30% of the option, really only lost you 3% on the $10,000 or $300. So the simple takeaway for this is do not overinvest when we're talking about the options. By overinvest, I mean purchase too many contracts. You only want to purchase basically the same the same number of shares that you would purchase to get on a stock-only purchase, right? So there's enough compounded leverage in the system to make everything you need. So don't worry too much about buying too many options contracts. If all this makes your head swim and you don't want to leap in options right now, just note the bid-ask price when you purchase your ETF and keep track of that. And sooner or later, you'll become a believer in the options side of it. So what about that best-in-class buying? What is it? How can I find it? What can I do with it, and why? Let's say that we get a signal to buy from the HUI. The HUI is in the gold sector. It's actually the gold miners index. And so we know that there are 15 stocks in that index that allows us to spread our risk among those 15 stocks. But the problem is we've not only spread our risk, but we've also bought into the mediocrity of that index. Sure, there's going to be some hot performers, but there's going to be a couple of dogs in there that's going to degrade our performance. The question always has been, or at least for me, how do I pick the best stock within a sector to purchase? Intuitively, I know that in a sector with 18 to 30 stocks, you're going to have some superstars and some dogs. So let's give you a quick example to put this back in reality. Back in November 2007, the NASDAQ Tech Index was up over 26% for the year, but 76% of the gains came from 4 stocks: Apple, Google, Amazon, and Research in Motion. That means that if you had purchased the Qs, you had at least 3 of those stocks within a sector. Well, we have that all set up inside of the ETF tipping point. We have a whole chart here, separate chart, that shows each individual ETF broken down by its components. So, of course, in the case of the S&P 500, it's going to have 500. In the case of the Dow 30, it's going to have these 30. So this is the Dow, and you can see that on the very top of the list, we have, well, didn't read the top of the list yet. We have Alcoa, Chevron, and Boeing at this particular point in time. So if we wanted to spread our risk, we would buy options or the stock of Alcoa, Chevron, and Boeing. Because any one stock can always run into trouble, so I've always opted to buy 2 or 3 of the best, and to keep me out of trouble. So did I say options? Of course. You'll notice that there are diamond-shaped little devices by the column next to the ranks on the left-hand side. By clicking on that link, we will give you the best option to buy on that stock right now. So in this case, if we click on the components link, the little link I'm talking about is right over here on the right-hand side. So if we click on those links, it's going to show us exactly which option to buy on Alcoa, Chevron, and Boeing. Now, I still always am going to advocate buying more than one, just in case you don't put all your eggs in one basket. The nice thing is you'll generally see about 15% better gains by using this best-in-class stocks as opposed to simply buying the ETF, because you're separating the wheat from the chaff. So, for example, say the tech market is hot, and it's driving up the Qs, and that pushes that entire sector into bullish territory, and it generates a signal. Well, of course, there's going to be some major stocks that are the reasons behind that drive. We're going to go ahead and show you, how you can purchase the ETF, the double ETF, options on the single ETF, options on the double ETF, and then the superstars inside that sector. So this kind of does a lot of different things all in one. Now, this system is normally too volatile to chase. There's not any time to wait for confirmation. You notice in the closed trades list, which we'd be glad to send to you, the average trade list length is about, this says 12 days in the slide, but it's actually increased a bit. It's about 21 days right now. But, of course, there are quite a few trades that only last 1 to 4 days. Right now, we are in an across-the-board advantage, which is market-driven, not sector. So doing so without some underlying analysis would be a little bit counterproductive. The whole idea behind this was to provide a completely mechanical vehicle. So we don't care what other ways that you trade. You can day trade, you can do some swing trading, you can do whatever you want. This is an additional way to trade that's mechanical, that doesn't require a lot of emotional trading decisions, and also doesn't require a lot of research, something you can plug into what you're doing right now. And of course, the usual legal stuff our attorneys make us say: financial markets risky, investing is risky, past performance does not guarantee future performance. So that said, if you're interested in a system that has a baseline result, now when we talk about baseline, that's just on the single ETFs of 4% a month. Of course, it's going to be about double that for the double ETFs, and factors above that for the options and for the best in breed. So when we put together the system, we started trading the system live in 2007. So we've been, how many years is that? We're on 8 years now. So we've gone through a lot of different kinds of markets, right? We had the raging bull market from November 2007. We had a huge sell-off all the way through March of 2009. So in back testing, before we launched this in 2007, we had data going all the way back to 1993. So basically, we started this in 2007, January 2007, because that is the first date when we had all of these different pieces in place. I've given you all the pieces and told you what they are. The ETFs have to have options on them. They have to have double ETFs, and they have to have adequate volume for us to do these calculations. So these 9 sectors are what matches up with what we're looking for. Okay, so we will add more ETFs as they become viable. This is not a static system. This is something that we're continuing to add to, something I use in my daily trading, and I have since 2007. We have about 420 or so members on it right now. They give us ideas and suggestions. The BRIC sector, which is the Brazil, Russia, India, China sector, is of particular interest, and there are no current vehicles that exactly match up with what we're looking for. Another sector is kind of the Russell 2000. So we will be making more suggestions and changes to the system, and we highly encourage your comments and criticism. This is a chance for you to work with us to offer your insights and your advice and your opinions to allow us to further modify and help and improve the system so you get better and better results as long as the rest of us. So who might be interested? We have a couple hundred people on the call tonight. And hopefully I've not whitewashed it and told you something that is just fluff and hype. Who might be interested? You might be interested if you're content with getting somewhere around 4% a month just trading the single D ETFs with, of course, the knowledge that you can do much better than that if you're willing to take a little bit more risk and trade the double ETFs or the options on the single ETFs or the options on the double ETFs. Again, these are what our current trades looks like. This is the DIA chart, and here's the current trade that we're in on the DIA. So on the DIA, we entered right in here, you can see, and that trade is currently profitable. That's a trade that we're still in as of right now. SPY, the same thing. Great chart on the SPY. We're in a trade on the SPY right now. Profitable trade. We're in a trade on the Qs right now. Qs trade, I think, is one of our best ones right now. Profitable trade. So if you would have joined just a few months ago, these are the trades that you would have gotten. These are the trades that all of our other members are in on these massive ETFs without day trading, without poring over charts, and without being chained to your computer 10 hours a day. Let's see, the KBE trade. We're in that trade. Started back in here, and it's marginally profitable. Not great, but marginally profitable. I think that's all the trades we're in right now. XOI, HUI, SMH. SMH trade is one of the longest ones. It goes back to right here. IYR, XLB. XLB trade is a new trade. It's slightly marginal. It's right here. So this is the real world. These are not hypothetical. These are not theoretical. These are trades that were generated in real time, sent out to not only myself, but members in real time since 2007. So what am I showing here on the screen? Can anybody give me an answer to what's showing on the screen? Anybody have any idea what that is on the screen? Richard Berry, Hill of Beans. Yep. And we've got another answer from Ashwin, ETF of beans. Good answer. Yeah, maybe it's a bean ETF that just focuses on bean prices worldwide. It's a hill of beans. Well, a hill of beans, why I bring that up is none of this is going to matter a hill of beans unless you have a plan for executing, unless you have a plan for putting this into place in your trading. Like I said, I am nobody special. I grew up in Preston, Idaho, the home of Napoleon Dynamite. However, I did have a huge advantage in that I very early and quickly worked with wealthy people all over the world, everywhere from Beverly Hills to Moscow, Russia. But when it comes down to it, the most important thing for me is my family and being able to spend time with my family. Not selling this as a hedge fund or moving to Wall Street or anything like that. So here's my offer to coach 25 of you. Like I mentioned, we have about 420 active members. We're going to get to right at 500, and then we're going to basically shut the doors until through attrition or through time that we decide to add some more people. So currently, right now, we're going to add 25 new members. So there's two program basics. Very simply, we have the $997 program for 6 months access, or you have the $2,997 program for 3 years access. The only difference between those is the length of time, and of course for the $2,997 program we do give you some very special bonuses. However, if you choose the $997 program and just try it out for 6 months, we will allow you to upgrade at any point with no penalty. All you have to do is pay the difference and switch into the full 3-year program. So we're trying to be as fair as we can. And of course, like we mentioned, I hate overhead. I don't want to turn this into a hedge fund. I don't want to be a hedge fund manager. I don't manage other people's money. I do my trades for myself and sell this information. So I hate overhead. I could hire some fancy marketing guys and get some full-time sales guys and make this all nice and pretty and deck out the graphics on this PowerPoint. But of course, I haven't done that because I'm a very simple guy. You can see there, this is a picture of my office right where I'm sitting right now, the Trading Science office at 122 North Raymond, suite number 1, Spokane Valley, Washington. We're a real company. We've been in business for 15 years doing this. You can see our sign right there. You can see us on Google Maps. Spokane, if you're not familiar with the Washington area, is in the eastern side of Washington. And feel free to drop by the office. We have customers come by the office all the time. 122 North, Raymond, suite number 1, across the street from the McDonald's on the south side of Sprague. So instead of all the hassle of dealing with big wigs and hedge fund managers, I'd rather enjoy my free time and deal with just a few customers. Now, here's the exact ideal kind of customer that I would like to deal with, and his name is Dean. And I'm going to play you a video from Dean.
My name is Dean Hamill. I live close to the city of Florence in Oregon. I've been trading using the ETF tipping point strategy for about 8 months, and I am more than satisfied with the results, some of which I'll share with you in a moment. Over the years, I've tried many investment advisory services, newsletters, and tried many different investment strategies. The results with all of them have been less than stellar. For years, I've been looking for a strategy that is easy to follow, easy to execute, low risk, and of course, most important, significantly profitable. After my first few tipping point trades, I became convinced that this is what I had been looking for. Now I'm going to quickly recite for you just a few of the results of my early trades. Some of them are very impressive, and some less so. But the overall result is very exciting and very profitable. I'll tell you first of all the percentage gain and then the number of days in the position. 9.49%, 64 days. 9.19%, 64 days. 10.51% in 54 days. 6.81%, 62 days. 4.41%, 63 days. 16.21% in only 36 days. Out of the 37 trades I've been doing, 32 were winners and only 5 were losers. This is a very impressive track record. Another feature I like about ETF Tipping Point is that it takes so little time. I just wait for the daily instruction. Most days there's no change, and so there's nothing that I have to do. When a signal does come, it takes only a few minutes to execute, and then I'm done. My personal experience has convinced me, and I recommend ETF Tipping Point without reservation.
So we're looking for a couple more students like Dean. Okay, let's get this to go to the next slide. And so I'm willing to put my money where my mouth is when it comes to this and give you a guarantee on this. It's very simple. I'm going to take the majority of the risk by giving you an ironclad 2-part performance guarantee. Part number 1. And this is in writing. If you go onto the order page, you'll see this, and you'll get this immediately after you order. So you have this right in front of you. Part number 1 of the 2-part performance guarantee. Go through the entire training. Start trading live. If you don't love it, get a complete refund anytime within 30 days of ordering. No questions asked. Part number 2. Learn the system and use it for a full 6 months, executing all the trades as they come up. And if you don't at least make back your system investment, the $997 for a 6-month option or $297 for a 3-year option, I'll personally work with you for free until you do. So part 1 is a pretty no-brainer. It's a 30-day money-back guarantee. Part 2 is where I'm agreeing to spend my time with you to make you profitable and to earn your investment back. Either way, you love it and make good money with it, or you hate it and you get your money back. I don't think we could be much more fair than that. I'm extremely confident in the system. In fact, I'm so confident I'm going to do a little bit of a joke and, of course, put a picture here of a coffin. I'm so sure that this system will work for just about anybody, that it would even work for you if you're dead, lying in your coffin, as long as you still had access to a text message or an email to get these updates. That's all you really need. Even laying there in a coffin, you could make these trades. It's that simple.
Hello, my name is Ken Moore. I'm from Clearwater Beach, Florida, and I have to tell you, I was amazed by how easy the ETF tipping point system is to use. let me log into TD Ameritrade system and show you my balances. This is the results so far for today. Let me go into the account statement or accounts tab, over to the history and statements tab, and this will bring up my activity so far. What I did was to watch the videos Kurt developed, took notes, and practiced on Thinkorswim paper money trading system. I had never done any trading before I became involved in Kurt's ETF tipping point system. And I did not start trading live until February 1st. That's why this shows from February 1 to February 11. What I did was I spent $31,000 on my options that I purchased, and so far it's given me a net positive change of $7,187. And that's approximately 23%. I invested in 3 different ETFs using the best of breed options. These were ETFs that were less than 30 days old. Like I said, I invested a total of a little over $31,000, and my return on that is about 23%. If you understand and become familiar with entering the transactions, and that's why I took the time to become familiar with the transactions in the paper money trading system, it's relatively quick and simple. Because I work full-time, I have scheduled a meeting from 3:30 to 4 p.m. on my calendar, because that's when I receive Kurt's email for the signal changes for the day. That way I'm not pushed to enter the transactions, and no one's going to bother me. Most days I don't need to do anything at all, so just go back to work doing my normal stuff. I'm a convert for life, and I'd highly recommend this way of trading to anyone who wants to trade with some guidance.
So you heard those results. That's from Ken. Ken had never even traded before. So again, our ironclad 2-part performance guarantee. Part 1, go through the entire trading, trade live. If you don't love it after 30 days, get your entire money back, no questions asked. Part 2, learn the system, use it for 6 months, execute all the trades as they come up. We guarantee that you'll make at least that investment price back, or I'll personally work with you for free until you do. Okay, and here's our last customer that I wanted to show you some information from him. He created his own little spreadsheet, so this is pretty cool.
Hi, my name is John Lilly, and you're looking at a spreadsheet that I'm maintaining for my ETF tipping point. And as you can see in the percentage gain and loss, I'm gaining 44.12 the 16th of February. I began using the program, and I've been very pleased with the progress of the program so far. I know this is probably not a really good video since I'm using my iPhone and it happens to be the older one, but I just felt that I had to show everybody what was going on since I've just exited 3 trades today and put on 2 more. I've got 1 more to put on tomorrow. Unfortunately, the market closed before I could get the last one put on. But as of today, I am very pleased with the tipping points progress and the results. So if you're thinking about using this, you might want to give it a try. All right, I wish you well. Thank you.
Okay, this is Kurt, and I'm back. So what we're going to do for the bonuses for the first 25 people that sign up tonight, this is if you sign up by the end of the weekend. By Saturday evening is our cutoff. Number one, we're going to make a donation in your name to Kiva.org. If you're not familiar with Kiva.org, Kiva.org is a microfinance company for third world entrepreneurs. So this doesn't cost you anything. We're going to take a portion of the sale and donate that to Kiva.org in your name. Number two, we're going to give a 2-day live workshop in Spokane, Washington in late September, early October. We actually have the dates. It's actually the first weekend in October. So it's that first Friday and Saturday in October. So here's how you claim one of your 25 spots. Here's what you need to do, and then we'll explain a little bit about the bonuses, the Kiva, and a little bit about the workshop. Number one, call our secure voicemail line, 509-720-7867. and leave a detailed message with your full name and address, phone, email, and credit card number with expiration, along with a choice of which of the two packages you'd like, either the 997 or the 2997, and we'll return your call ASAP to confirm and process your order and answer any remaining questions. Or you can order entirely online at etftippingpoint.com/6-month, or for the 3-year, etftippingpoint.com/3-year. So like we said, we're only going to make these bonuses. The bonuses are, of course, that you get the donation made in your name to Kiva.org. Also, you get a free ticket to our workshop here in Spokane. So we're going to count down how many of the 25 spots we have. So before I've checked, of course, we will have 25. So we'll go ahead and check and see where we're at and answer a few questions and make sure that we get everybody's questions answered before we leave today. So a little bit about Kiva. Kiva gives, like we said, microfinance loans to third world entrepreneurs. When they pay the money back, the money recycles in the system and you can loan it out again. So it's kind of like the difference between giving someone a fish versus teaching them how to fish. So a lot of the loans that we fund are in places like Costa Rica and Nicaragua. This is a loan that gives a gentleman an opportunity to purchase a smoothie franchise. He's raising $2,100 for this. Norman is raising money to buy a motorcycle. He's going to use it to provide a courier service for companies and work in fast food delivery. This gentleman is a cattle rancher, giving him the opportunity to expand his flock of, I guess it's not a flock of cattle, it's a herd of cattle. And to talk about the event, this is an unbelievable opportunity to attend an event live in person with us in Spokane, Washington. Absolutely free, 2-day workshop. Give you everything you need to do to improve your trading. This is one of our last events that we had. This is an unbelievable location. It's the Davenport Hotel in downtown Spokane, Washington. It's the kind of place that if it was in New York or LA would be $400 or $500 a night. Because it's in Spokane, we're kind of out in the middle of nowhere. It's only about $100 or $110 a night. It's a fabulous location, the utmost in luxury, very, very nice atmosphere, and it makes for a very enjoyable, relaxing time in our workshop. So to claim one of those spots, all you need to do is you need to either call 509-720-7867, leave a detailed message along with your full name and address, phone, email, and credit card, along with expiration, and along with it which choice of the two packages you want, either the 997 or the 2997. We'll return your call ASAP, or order online. And just as an extra pitch for the 2997 package, if you join the 2997 package, what we're going to do through the end of the weekend, like we talked about, the deadline is Saturday at midnight, we're going to give you our other course that we have called Option Science, Trading as a Business. We sell that standalone by itself for $2,000. I've sold hundreds of copies at $2,000. You get that for free. You also get our weekly Options Science course, which we sell for $500. You get that for free. You also get our time warp strategy, where you take advantage of time decay in the market. We sell that for $500. You get that for free. So basically, you get every course that I have on the market if you go ahead and take the 2997 order. Plus, you get the DVDs of our entire past workshop. So you get about a $6,000 or $7,000 value that we sell every day, day in and day out. You get that just for purchasing the $3,000 3-month program right up front. Now, of course, like we mentioned, if you do want to go ahead and just stick your toe in the water and try the 997, that's absolutely fine. We will give you all those bonuses. You will not be penalized if you choose the 997 and down the road, a month or two after you've made a few trades or 2 or 3 months into your subscription, you want to upgrade. If you want to upgrade in the future, that's perfectly fine. You pay the difference between the 2997 and the 997 and you upgrade. So let's go ahead and check our questions, and I want to check and see exactly where we're at on orders and how many slots we have left. So go ahead and pop in your questions here, and we'll make sure that we get all the questions answered. This is from Bud. He says, if a person can't be available between 3:30 and 4, what can be done? Is there any trading system that can take your signal and act on it? We don't have the automated signals for this because there's just too few trades really to make it really that worthwhile. But what you can do is you can just place those after the market is closed for execution on the next day. And we have many members that do that. That's not a problem. This is from MB Hurl. He asks, how much money do you need to be able to execute all the trades over a 6-month period? We would recommend at least $500 per sector, which would be $4,500 total because 500 times the 9 different sectors. If you have less than that, you would simply take, you wouldn't take all the trades as they came up. Let me check and see how many spots we've got. Let me log into my account here real quick. And we'll be able to tell you exactly where we're at on the numbers. One, two, three, four, five, six. Okay, well, the good news is that we still have quite a few spots left. We have exactly 19 spots left right now. So let me draw that in. 19. So we have 19s out of the 25 left. Let me go ahead and answer more questions as we go. And this is from Alan. He says, is the next day trade an at market trade? Yeah, you just entered in to be executed at the market the next day. And Richard Berry says, what's the difference between the 997 and the 2997? Length of time? Yes, the difference is with the 2997, we give you all the bonuses. We give you the additional options science training as a business course, was $2,000. We give you the time work strategy, which is $500. We give you the weekly option strategy, which is $500. We give you the videos of the the options workshop, which is, we sold that for $5,000. And then the difference is with the 997, you get a 6-month subscription. With the 2997, you get a 3-year subscription. From Richard, he says, so does the 997 last 30 days or 6 months? The subscription lasts a full 6 months. The money-back guarantee for you to try it out risk-free is the 30 days. Rick Berry says, I'll do part 2. Okay, so yeah, if you haven't placed your order yet, go ahead and call that in to 509-720-7867. Or, of course, you can order online at etftippingpoint.com/6-month or etftippingpoint.com/3-year. Let me go through and answer all the remaining questions we have, then I'll check again to see how many spots we have. If the number is ringing busy, that just means somebody else is already on it. Make sure that you call back here in a minute. This is from Antush Rai. He says, is there any way to test drive the system before I commit long term? Absolutely. Just go with the 997 option. You can test drive it for 6 months. If it doesn't meet your expectations in the first 30 days, simple money back guarantee. This is from Kenji. They ask, how do you determine the exit point? The exit point is we want to stay in the trade until the market switches from bullish to bearish, or we have a stop. So we don't have a limit. We don't have a limit on the profit side, but we do have a stop on the negative side. Okay, let me check and see where we're at on terms of our orders. Hold on just a second. Okay, quite a few orders coming in. That's fabulous. Thanks everyone for joining. Okay, we have 11 spots left. So let me write that here on the screen. Man, my handwriting is terrible on this thing. It's a little bit too small. So 11 spots left. Maybe I'll color them in a little bit more. Sorry about that. And I'll go ahead and take any remaining questions we have. 11 spots. So folks, go ahead and give a call to 509-720-7867, or you can order online, of course. I recommend the broker. I recommend the broker ETF Tipping Point, but that's me. I recommend the broker Think or Swim. This is from Phil Shumway. He asked, what is your typical stop percentage in the ETF space? Ours are pretty big. It's based on the average trading range, but it's actually about 5 to 7% typically. This is from Alan Schaff. He says, do you give the bonuses if you upgrade before the 6 months? Yes, we will do that. We'll make a special exception for that because we don't typically give these bonuses away. This is a special thing that I'm doing. The bonuses that I'm talking about, I'm referring to are bonus number 1, the donation in your name to kiva.org. Bonus number 2 is the 2-day live workshop in Spokane, Washington. Okay, those are the standard bonuses that we're giving away. The additional bonuses that we're giving away if you order by Saturday and you order the 2997 package is my Option Science Trading as a Business subscription, which is $2,000. The DVDs of my $5,000 2-day workshop on advanced options and advanced options trading, and the weekly options science platform, which is $500, and our time warp strategy, which is $500. You get all of that if you order by this Saturday and purchase the 297 package. Now, if you buy the 997 package now and upgrade, yes, we can do that as well. We'll have to make a note between us to remember that, because these additional bonuses aren't automatically included in the package. It's something that I'm throwing in as a special right now, so we'll just have to document that so we remember that when you upgrade in the future. From Bill, he says, great webinar. The recommended options on the best in breed is new to me. How do you decide which option to recommend? Seems too many to list. Well, we look at the options for you and pre-select those. What we're doing for a lot of those is we're looking for options that are 4 to 6 months out and a delta between 70 and 75 and a couple of other settings as well. So Steve Magnus says, is there an Easter special? Well, yeah, that is the Easter special. The Easter special is, besides the normal 2 bonuses, we're going to also give you the Options Science Trading as a Business, which is a $2,000 course, weekly Options Science course, which is a $500 course, the Time Warp Strategy, was a $500 course. Basically, every course that I currently sell, we're going to give you if you purchase a 2997 cents, by this upcoming Saturday. This is from Leonard. He says, is it possible to see all the past trades you've executed? Yep. If you go to etftippingpoint.com and scroll down, there's going to be a past trade history, and you open that up, it'll open up a different window, and it'll show you every trade on every different sector. This is a great question from Phil Shumway. He says, in this era of market highs, do you anticipate more ETF trades to be the short side over the next couple of years? Absolutely, and I would definitely hope so. Our system crushed it in 2008 in the bear market, and we'll crush it again if we get another bear market. So I'm hoping for a nice bear market. This is from Bill. He says, what indicators do you use to trigger a sell order when a sector is in a free fall? Great question. We use the exact same indicator. The ETF tipping point itself will flip over from bullish to bearish. Typically, obviously we're not going to capture the exact peaks and valleys, but it'll flip over if a market looks like it's going bearish, it'll flip over in a matter of days and get us on the bearish side very quickly. This is from MB Hurl. He says, your website has a members area. Would that be available with this purchase? Yes, absolutely. That's where you get access to material. So if you purchase the 297 You can go online to etftippingpoint.com/6-month, or you can go online to etftippingpoint.com/3-year. It'll show that guarantee there. And again, you can call, leave an order at 509-720-7867. Leave a detailed message along with your full name and credit card number, along with your phone number, and the best time to reach you, and we'll call you back the following business day and return your call as soon as possible. So let me see where we're at exactly on orders. And great question from Robert Bailey. Says, instead of shorting an ETF, can you buy a contra ETF? Absolutely. When we're talking about the double ETFs, you can do that very easily. And for the single ETFs as well, there actually are contra ETFs for almost every regular ETF we have. This is from Phil Shumway. He says, great question, great webinar, thanks. We already answered MB's question. This from Joe, would you buy anything on this day since the trades have been on for a while? No, we wouldn't currently buy anything. We would wait for those existing trades to come to fruition, to either be stopped out or from reverse from bullish to bearish. Okay, folks, it looks like I answered all the questions. Let me go back through and add up where we're at order-wise so we can continue to offer those if we still have those available. Again, this offer is only good through Saturday. So if you're listening to this as a replay, it is still good, but only until this next Saturday. So call 509-720-7867, leave a detailed message, or go online to etftippingpoint.com/6-month. And it looks like we're winding up on the number of spots that we have out of the 25. The reason we only do 25 spots is we want to make sure that we can get everybody's questions answered, get everybody on board and all that kind of stuff. We have exactly 7 spots left. Okay, so if you haven't taken action yet, go ahead and call. Now is the time, 509-720-7867 or etftippingpoint.com/6-month or etftippingpoint.com/3-year. So thanks, everyone. We've been on, let's see, how long have we been on? We've been on 1 hour and 24 minutes. So we're about ready to wrap up. If there's any last questions, I'll go ahead and take those last questions. Otherwise, thank you so much for your time. And remember, this bonus does expire. All those extra bonuses that we're giving for purchasing the 2997 package expire this Friday. All the rest of the bonuses and the offer itself expires when we have sold 25. Looks like we have 7 to go. Oh, looks like we have a couple more orders that just came in. So looks like we only have 5. So 5 to go. So thanks, everyone, for your time. Thanks for being on tonight's webinar, and we will talk to you soon. The best of luck to you in your trading, and hope to see you in the members area, and hope to see you in person at our live workshop here in Spokane, Washington, coming up in the first weekend in October. So thanks, everyone. Talk to you soon.